Hi, my name is Fulton Abraham Sanchez. I am the CPA of the firm Fast CPA Consultants, and today we're going to speak about what you need to know about the coronavirus relief loans. The case for this specific type of loan is based on the CARES Act. This act was created to benefit businesses because of the coronavirus crisis. The key of this provision for the law is the giving of loans to companies with 500 or less employees, and for those who pay payroll in the period of February 15 through June 30. Now, this specific act created three types of credits. Within the act, those three credits we'll say is there is one specific loan program with grant. There is a disaster loan that is provided for loans to small businesses, and there are some credits. Now, each of these programs have specific requirements and instructions. The famous one, or the most famous one, the Payroll Protection Program. This is the one that will give small businesses that apply for loans a grant that will be composed of the monthly payroll for 8 weeks. Now, to apply to this program, you need to provide a payroll that is paid for 1 month. How much you pay for payroll 1 month? Because that will be the measure for the total of the loan. So it's the payroll amount that you have per month times 2.5. That is the maximum amount that you're going to get. Whatever you pay within 8 weeks of payroll plus utilities plus rent, it will be forgivable if you are able to provide or to prove and provide information that you have used that for paying payroll, rent, and utilities. So that's the amount forgivable. Any amount that is not used for those specific sources, for those specific payments, it will be given as a loan. And the loan will be maximum 2%. So remember, this is a program that provides a grant, and you will not have to pay the amount that it's devoted for the payment of payroll, utilities, and also rent. Now, you have to be very careful here because they are going to require how much with your calculations. How did you get to the calculation of the monthly amount? And that is required when you do the application for this. The Payroll Protection Program is through the bank. You have to go to your bank website, log in, and produce the information that they will require. First of all is, as I said, the payroll. Now, what else do they require? We'll give that in a minute, but just to give you an idea, they will require tax returns. They will also require personal financial statements, payroll, and proof that you have currently paychecks for your employees. So it's critical that you have that information. The second type of loans that the CARES Act provides is the famous also disaster loan. These disaster loans are given through the Small Business Administration. So remember, Payroll Protection Program is through the bank, and there is a grant here. Disaster loans are given through the Small Business Administration website. And the key to this program is that you have also a grant, $10,000 grant. And the requirements is also a little more cumbersome. For example, here in disaster loan, they will require business license, personal financial statements, profit and loss for 3 years, balance sheet, all that information, and 6 months of bank statements. All that information will be needed if you want to apply to the disaster loan. And this type of loan, as well as the Payroll Protection Program, they provide for a 1-year grace period, so you don't have to pay your loans through that period. And the interest for the disaster loan is 4%. So remember, Payroll Protection Program, 2%, disaster loan is 4%. Now, here in disaster loan, there is no personal guarantee. And this is the virtue of the CARES Act. They will not require personal guarantees for the Payroll Protection Program or for the disaster loan. So remember that this is very important. In this case of disaster loans, if the loans are lower than $200,000, then there is no personal guarantee. Be very careful here in disaster loan because there are two types of loans. We have applied to all this, so we know the details. If you choose Express, it will give you only $25,000. That's what I was reading. The other loan, regular loan, it will be like a larger loan. So be very careful if you want to apply to disaster loan, the Small Business Administration, because there are some limits in terms of how much you can, your selection, how much will be given in the loan. Now, the CARES Act also created the Employment Rotation Credit. This Employment Rotation Credit is that you can retain, you can keep the portion of the payroll that you pay for as an employer. Remember, this is very important because people believe that I'm going to get all the credit for all the taxes that I have withheld from my employees. No, it's only the portion that the business pays, 7.65% times the payroll amount of the period. So that's the only amount that you will be able to keep. And in addition to that, also the payroll tax deferral means that if you owe taxes, they will be split in two. If you owe taxes, you will be able to defer again only the portion that you owe as an employer. That's the only portion that you can take as a retention credit or as a deferral. 50% of the pay of the employer FICA, which is Social Security and Medicare, will be deferred 50% December 31st, 2020, and the December 31st, 2021. This is only for the portion of payroll taxes that as an employer you are supposed to pay. In terms of the requirement for these loans, for the Payroll Protection Program and the disaster loans, remember that they require a bunch of documents. And the disaster loan is perhaps the one that requires more and more documentations. Just to give you an idea, if you have 2 bank accounts, you will need to upload to the system in the Small Business Administration for the disaster loan 12 bank statements, but they require 6 months of bank statements for each bank account that you have. So be very careful when you are uploading information, because we know already some clients have come and look for help. Because in the case of the Payroll Protection Program, if you do not provide how you calculate your payroll for the amount that is going to be in the application of the loan times 2.5%, that's the maximum amount that you're going to get, they are going to send you back the application for clarification. So it's very important that you do not go beyond the limits. Let's say, because it's simple math. They will require, for example, payroll forms, and in payroll forms how much you pay in monthly basis or quarterly basis. So that is undeniable. And if you pay an X amount a month and you put more money they want as a loan for the Payroll Protection Program, they are not going to believe it. It's not going to match. So whatever you are paying in a monthly basis, let's say January or December, use that. You can use December or January if you have not 5 employees, and you'll use December. Then that amount used for the calculation of the Payroll Protection Program for the monthly payroll. So be very careful that the amounts match, because it's very easy. These are systems that they do the matching, and they're gonna know when things don't work. We have created a post that you can check in here in the description box of this video. The link is there to go in and see in detail the specific of each one of these loans. If you have, for example, you can also subscribe to receive more videos when we post it. And if you have a specific question about this topic, Click on the link and send us an email here in the description box. Thank you. Fancy Consultants.